Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice from Tackle Trading to bring you a video on defining what are the financial markets. Now, the financial market is a very broad term that can mean many different things, whether you're talking about the capital markets in the stock market or the bond market or the counter market, the annuities, life insurance products. There's many things that go into what is defining the financial markets. However, as an active trader and investor, we want to limit that to 4 core tradable instruments. The first tradable instrument is traded in shares, and that is the stock market. Now, we can buy stock and we can sell stock. The reason we buy stock is for three reasons. Number one is just to take into account appreciation or growth. So as the stock goes up, you buy a stock at 100, it goes to 200, you are going to make $100 a share. The second reason is the dividend payout. Many stocks in the financial world will pay you a dividend simply to carry the stock. Now, the dividend is calculated over a yearly annual basis. However, it is delivered over a quarterly basis. So for example, AT&T will pay out a 5.6% dividend. Apple will pay 1.6%. Every company determines that on their own. Now, you can also sell shares of stock, and that is what we call short stock, whereas if the market is going to go down, you are going to borrow the shares from the broker, you're going to sell them to somebody else, and you make money as the market goes down. So for example, if you buy a stock at 100 and it goes down to $90 and you buy it back at 90, you get to keep the remaining $10, which means you just made $10 a share. The second market is traded in a contract, and that is what we call the options market. Now, the options market, you have 2 different types of options. You have a call option and you have a put option. These are leveraged tradable instruments that are called derivatives. It is derived from the value of the underlying, and in this case, the underlying would be the stock. So for example, you can buy a call option instead of buying the stock to lower your cost basis. You can buy a put option instead of shorting the stock to lower your cost basis. But you can also sell calls and you can also sell puts in a form of cash flow strategies like covered calls, naked puts, and credit spreads. Now, the third market is what we call the commodity market, or otherwise known as the futures market. The futures market is both commodities, but it's also your market indexes. You can trade your currencies in the commodity market. The futures market is a 24-hour market and a market where many professionals seek to go to because of the leverage, the 24-hour market, amongst many other reasons. And I personally love commodities because they don't go to zero. And then the last market is known as the foreign currency market, or otherwise known as the Forex market. It is traded in lot sizes. You have mini lots, micro lots, and you have standard lots. The Forex market is also a 24-hour market, and it's also one of the world's largest markets in the sense that it trades over $5 trillion a day. So hopefully this little video from Tackle Trading helped you understand what the financial markets are. And go check out many of the other videos over there at tackletrading.com or on our YouTube channel.